Hello, this is Monica Sawyer. Welcome to Real Estate Investing for Women, where we focus on all aspects of real estate investing, including strategies, mindset, emotional mastery, money smarts, and so much more to ensure your success. If you'd like to learn my personal favorite investing strategy, just go to blissfulinvestor.com. You can also listen to this episode on the Real Estate Investing for Women podcast on iTunes. Now, let's welcome our guest. Today, I am so excited to welcome to the show Anmol Singh. Anmol made his name as a high-paid consultant in the trading and investing industry. He launched LiveTraders in 2015, which is now voted the #1 trading education firm for 3 years in a row. Wow. He has coached and trained over 1,000 plus traders and investors, some of whom have now gone on to run their own hedge funds. He is considered the leading expert in the trading psychology space, having helped thousands of traders all over the world dealing with psychological and behavioral issues that arise when high stakes are on the line. Currently, he remains an avid stock market and forex trader and spends his day working with students of his trading firm LiveTraders and continues to financially back them. He also is involved with other entrepreneurial ventures and franchise stores, in addition to maintaining an international real estate portfolio. Hey there, Anmol. Welcome to the show.
Thanks for having me. Looking forward to chatting with you.
Yeah. You know, what's really interesting is, so in 1999, 2001, so just before that, I actually went on my world trip in 99. So it was before that. So for about 4 years before that, I was a day trader with options. And loved it. That's how we paid for our trip around the world. We just kind of packed up everything, put some backpacks on our backs, and for 6 months headed out into the world. It was amazing. And the stock market paid for that. But so while doing that, my other side hustle was in real estate. So it's so interesting how the two can play together, right? Now in my household, the way things work is my husband handles a stock portfolio. I'm not an active trader anymore, but I manage all of the real estate. So the two can go hand in hand. They don't have to, but I'm really excited about having this conversation with you because I haven't met anybody else that does this sort of trading and real estate thing, right? And making it both successful, because they do take a level of focus, both of them, right?
Yes.
So could you tell us a little bit, like the 2-minute version of your story and kind of how you got to where you are?
Sure. So I started trading in college. I went to Brunel University in London. So I was in my college, and then it came a year where you have to start applying for like internships. So I was like, okay, I got a great business degree. I'm easily going to get a job. Started applying everywhere, but I just wasn't able to get a job for some reason, right? Got a bunch of interviews, but never secured a job. So I was like, I need to start to probably look elsewhere, maybe make my own career. And that's how I was introduced to trading, just by, being online, searching about it. Started learning, and found one of my mentors, Jared Wesley, who actually taught me how to trade. And he was trading already for like 15 years. So he taught me how to trade, took me under his wing, mentored me. And then a few years down the line, now he's actually my business partner with our venture, LiveTraders. Because I was like, hey, I'm your case study right here. We already did it. You already taught me, and I'm making money now as a trader. So, clearly your education's working. How about we team up? Right? You can do the education side. I can handle the business side of things. And that's how LiveTraders was born. And we've been now educating and teaching other people using the same model that he used to teach me. And I've been trading for about like almost, over 10 years now. And I've just been trading pretty much all my life.
Nice. So you've been trading for 10 years. So you've been through serious downturns too, yes?
Oh, yeah. The first year of trading was all downturns.
Yeah.
There was no money made in the first year.
Yeah, it's so interesting, right? Because if you know stock, you know that you can make a lot of money on the downturns. It's pretty amazing, right?
Yes.
It's much more fluid than real estate. Real estate is what is like, for me, it's my foundation. It's like the brick wall. It just, and we just keep adding bricks, like it keeps going up, right? But the stock market is much more fluid, much more liquid, much more volatile. It depends on how you want to look at it, right? So I do love the stock market also. So tell us from your perspective how to find a good deal. Let's focus on real estate.
Sure. So in real estate, the thing with good deals is that I think people have a misconception that I can just go online and I can find a great deal, which you can sometimes. There's a lot of good deals online available. You just have to be willing to search. And you have to have the mindset of not what the property looks like right now, but what its potential could be. Maybe there's more square footage. Maybe I can add something here, right? So that's how you look for good deals, is like you have to have that vision of what it could look like, right? So there's a lot of properties that I've had that were basically maybe $1,000 a month rent properties, right? But we took those and, we changed the whole layout, we changed the kitchen, we made it a luxury, apartment that you can now get maybe $6,000 or $7,000 for, where you were getting $1,000 for. So, you have to look for what added value can you make to the property, and that's how you can find a good deal. The other thing, which we can talk about down the road, is building a network so the deals are brought to you rather than you hunting for deals online. Because if something's online, my guess is people have already contacted the property owners, other people have already looked at because you can just see the website traffic. X amount of people have already looked at the property. Is it a good deal? Maybe not. So you have to build a network, and you have to start, throwing out feelers and have these, people who are looking out for the deals for you and bringing them to you for a percentage of something. So you have to build a dream team, which we can touch upon later down the segment.
Oh, I love that. Actually, let's do that in extra. We'll do a deep dive, okay?
Sure.
So in extra, we'll do a deep dive on how to build a dream team so the deals come to you rather than you chasing them. I love that idea. So let's talk a little bit about obtaining the capital to invest in real estate.
So, obtaining the capital, there's many different ways to do that. Like, so for me, when I started trading, for me, the capital for investing in real estate came from trading. I was making money as a trader. I was having those profits, which, it didn't make any sense to me to just keep it in the bank account, which is producing nothing for you, right? And it didn't even make sense to add to my stock portfolio because I already had a good amount of money in there. So that's what I did, is I took my income from my real estate, from my trading, and parked it into real estate properties. So what people can do for capital is, think about what you can do a year or 2 or 5 years from now. So start saving a portion of your salary or your current income that you're getting. Start saving a portion of that so that in a year, 5 years, 3 years time, you're in a position to actually invest in something, right? In the meantime, you can hone your skills. You can get good at it. You can study, right? You can get your knowledge right so that when you do have the capital, you're able to invest. The other way you can do that is, again, through a network. You have to be willing to network. You have to be willing to go to these real estate meetups, right? Your local real estate organization. You have to be willing to go there. I know people don't like going out of their house for something physical, and it's a lot of people. I don't know what to say. You might feel anxious, but you have to be willing to put yourself out there, because that's how you build connections with people. And you trust me, people are out there looking for deals. They are out there. They want good deals. They want somewhere to put their money in. So if you can be the guy or girl who could find them the good deal, raising money is easier than what people think it is. You just have to find a good deal. All starts with a deal. You have a good deal, money will come, but you have to be willing to go out there, go to these meetups, go to these REO meetings, and all of that.
Yeah, I love that. So both of those are really, really good tips. And the one thing that you said that I just really, really want to highlight is it's okay to take the time to build the capital. People are so eager I want to get in right now. And yes, I will say it's always a really good idea financially to get in right now. But if you don't have the capital to do it, you don't want to lose hope because you can't do it right now. You can plan for your future, and that's a really, really good way to go. If you're planning, so you're saving to build that capital, right, to do an investment, learn along the way so that when you've got the money, you're ready to hit the ground running. So, and if you've got a side hustle, you can use all of that money for the side hustle to save, and then you get there a lot faster. And of course, networking, we've talked about a lot in the past. So that's a great way to find capital. So thank you so much for that. Give us your perspective on cash flow with real estate.
Sure. So cash flow is obviously every real estate investor's dream, is to get a property that's cash flowing. But there's also realities, within different markets. So if you're in, California, you're in New York, you're in, like a high income state, cash flow is kind of hard to come by, right? It's possible, but it's hard to come by. And then there are certain states where cash flow is like 1, 2, 3. Go somewhere in Arizona, which is actually becoming hard now as well. But you go to Texas, there's certain places you can get cash flow, and cash flow is obviously important. But with certain, if you're in New York like me, cash flow is not the primary goal. The primary goal is to get the income to pay off the property for you. So the approach that a lot of investors use here is that all they need is the down payment, right? So they're building a portfolio of real estate. They have the money for the down payment and just have somebody pay enough rent that's covering your taxes and your mortgage. So if it's covering your taxes and your mortgage, yes, it's not technically producing cash flow, but guess what? Somebody's paying off the property for you, right? So if you got a 10-year lease, 15-year lease, after which a property is being paid off, all you really put in was that down payment and somebody just paid off the property for you. I think in my books, it's a win if you think long term. So even if you build a portfolio of 10, 15 properties like that people are paying for, and you only put in one property's worth of money in different down payments, in 10 years time, 15 years time, once all those properties are paid off, now look what happens to your net worth. Like suddenly from putting in a $20,000, $30,000 down payment to now having a portfolio of 10 properties that's producing, increases your net worth like literally overnight, but it takes about 10 years. So, that's the approach. That's the approach I would use if you're in New York or, California or somewhere in those areas. But for other areas, same thing. Just look for, again, here's my expenses, right? Here's what I'm paying for mortgage. Here's what I'm paying for insurance and taxes. As long as you're getting more than that, you can list it for much higher than that as a rent if the area warrants it for. But don't lose hope if you're not getting that rent. Just get them to pay the property off. And, in 10 years time, you'll have a good portfolio that everybody else paid for.
And you get cash flow on it then.
Exactly. And then that's when the game gets fun. Because now everything is paid off and you're getting, good cash flow from, different properties.
Right. So could you tell us a little bit about where your properties are? You mentioned it before the show, but I want everybody to know.
Sure. So in New York, I have the least amount of investments in New York. Mostly it's commercial real estate, which right now I'm actually in the process of negotiating a lease for. Hopefully tomorrow it should be signed. So now that property will basically produce cash flow. It's very interesting. It's going to make about over 8%, cash on cash return. And for example, my mortgage on that would be like $5,200. I pay taxes, $3,000 or $4,000, but the rent I'm probably going to getting is going to be $12,000 or $13,000. So now that property is producing cash flow. But now, how did I get there to make that cash flow? Is I added some value to the building, where it was an automotive company that wanted to use that as a repair shop. I installed the lifts already in there. Now, for everybody coming in who wants to run that business, it's a gold mine. Hey, I don't have to install all these equipment. It's already installed for me. I'll pay you extra. Right. And now that's how you get the cash flow. So that's one of the properties. Then most of the portfolio is in India. So my family and we're big into real estate in India. So we have like commercial real estate where we rent out to Microsoft office space, Microsoft, State Bank of India. So that's all like a commercial real estate. And then we have a lot of like residential, all the new developments that come in. We try and acquire at least a couple properties on those developments. And then London, we have like small flats near the airport, which are handy because you always rent. We never had a tenant leave and weren't able to fill it because it's near the airport. Even airlines, they want their staff to stay somewhere. So it's very easy to lease that out. So that's where we primarily have our investments is in India, in the developing areas, the capital states. We have in London, we have a few flats around the Heathrow Airport. And then in New York, we have right now the commercial automotive service station property.
Got it. Which part of India are you in?
Delhi.
Okay. Got it.
Yeah.
Very cool. Interesting. We have a lot in Pune, actually.
Nice.
So yeah, very cool. So wow, that's so the thing that I wanted to point out here, what I thought was really interesting about that is that he is in very expensive markets. India is a little bit more affordable for us Americans, but you wouldn't believe like the way that property is skyrocketing there. We just sold something over there and it's like, whoa, but these are high cost markets. So this is a different strategy than most people talk about, but it's a strategy that I've also followed, which is buy something, just don't take it a negative cash flow on it. Don't worry too much about cash flow, right? Make sure that it's just getting paid down, paid down, paid down, and eventually you benefit from the cash flow. So it's a little bit of a longer term strategy, maybe 10, 15, maybe even 20 years. But on the back end of that, you're in markets where the rents are so high that you, with just a few doors, you can make a retirement level cash flow. And this is something that I really love because I don't like managing a lot of doors meaning houses, right? Or apartments or whatever. I don't like managing a lot of properties. And so for me, I really like the idea of I've got a few high end. So I do all executive properties. I do high end properties so that they'll start to cash flow. And I'm doing business with people that are going to stick around. They're going to keep the house well. It's going to be really, really easy for me to manage. And I just don't have too many of them, but I'm making a retirement kind of cash flow, right?
Right. 100% agree with that because it's low maintenance too. You get better clients. They're going to take care of the property. There's other markets too. I mean, this is not to say that there are other markets people can't play in. There's people can play in other markets, but for me, yes, the type of tenant is very important, because they're going to take care of the property. Then that means less expenses for you over time to maintain the property. Whereas you could play in the high volume market, but then with the high volume market comes, again, more work. It comes more maintenance, and it comes, I guess, a different quality of tenant. You have to, take care of the property. So yes, I'm in the same boat as you. I would much rather have, fewer doors, but have high quality tenants that are constantly, that they know they're going to be there for a while,
Right, right. I love that. So talk to us about sort of the way that you've done this. Like, how did you trade stock to invest in real estate, and how can other people do the same?
Sure. So all started with my partner, Jared Wesley, the guy who taught me how to trade. And so he did the same thing. So I guess when I started, I was pretty young in trading, and, my 19, 20 years old. So when I started, for me, I was looking up to him. So he was trading the markets for many, many years, and he did the same thing. He has a lot of real estate investments. So he was taking his 10, 20% of what he was making from trading and just putting it in like a rainy day investment account. And he kept building that by adding 10, 20% every month. And then once he had a good sum, he's like, okay, let me buy that property. And then that's how he was investing. So I learned that same methodology to do that. So he, for example, has a lot of industrial real estate, which is a market that I haven't done in. But he's got industrial real estate, and it's great because industrial real estate, you got clients, let's say like FedEx, that have the whole lot that they're using. They're not going to go. They're not going anywhere. They've been with him for like 30 plus years. And, anything bad happens, let's say to even the roof, which he has to technically replace, he can still have leverage. You're like, well, I don't want to replace it. Are you going to leave? They're not going to leave. They're going to replace it. They're going to work with you. Say, okay, we'll pay half. Let's just fix it. Because it's more cost for them to move than to, leave. So I kind of learned in that market, and I followed his footsteps. I didn't do industrial real estate, but I did more commercial and residential because that's what I understood. And that's another thing. People listening should invest in what they understand. Like industrial might sound good. Our mobile homes might sound good to you, right? But if you don't know the market, don't invest in it, right? That's why even though New York is a high income or high maintenance market, I would rather invest here because I know the market, and also because I know that it's not going to be like ups and downs like this. It's going to be stable. So your money is secure. Whereas in a high risk market, yes, you can get a better reward for your money, but in the downturns, it's also going to be much faster. So it's a trade-off that people have to make a decision for themselves as to what fits their investment criteria.
Do you think the risk is more based on market or class, investment class?
Both, markets and class. The market, obviously, if it's a upcoming market and, Amazon's opening a new office space there, now the market's going to go higher. But, what if there's a temporary space that they leave and suddenly all those jobs get pulled out of the rug, and then that affects the whole area? For New York, there's so many businesses, so many jobs that few companies leave, not going to affect the market. New York's crowded. Whereas certain markets, let's say you invest in a suburb where there's one big factory, one big company. Now you got a risk. If that company leaves, a lot of jobs in that area leave with it. And that causes the rents to go down and, subsequently your cash flow to go down. So yes, and they're much more prone to economic downturns. So something like what I think is going to happen in the next 2 years, those high risk areas are going to be the first ones where people are going to pull their money out. They're going to be like, I'll take 0.5% return in New York. At least my money is safe, rather than, looking for 10%, but potentially losing 20%. So, high risk markets, again, you get high reward, but again, you're taking high risk for the high reward.
And then how about classes like industrial, commercial, residential, um,
So I think going forward,
multi-unit?
residential, industrial is the way to go. Commercial, I think, is going to be the next one that's going to get caught up in what's going to happen. And that's primarily because, again, look at retail, right? Retail companies are declaring bankruptcy all over the place. Even Hertz Car Rental declaring bankruptcy, Victoria's Secret bankruptcy, Nordstrom's. So all these retail, like strip malls, right? That's going to be really affected down the line, is like strip malls. And more importantly, what people aren't thinking in commercial, office space is going to be heavily affected, because now, people are getting the sense, hey, Zoom's actually not that bad.
I can work at
We
home.
could we could actually do this, like we've been doing it for 2 months now. People are now used to it. They're like, we could actually do that. I think we could cut our overheads. I don't think we need that much office space. I don't think we need to have these big office spaces. You know what? Tuesdays are work from home days. So a lot of that's going to happen, which is going to mean that people are going to need less and less office space, and people are going to feel more and more comfortable working from home. And that's the trend that it's going there. It's no doubt about that, right? It's going there. So that's going to be heavily affected. So for me, like, I'm not investing in anything to do with retail or anything to do with office space, because those are going to be hurt the most. And it's already starting with ripple effects. Like even in India, certain tenants will be like, hey, we can't pay rent this month because of COVID-19. And they quote a act of God law, all this stuff happens. But then, you have to go through all of that. So there's ripple effects for that, because if people don't pay rent, guess what? Those people won't have to pay their mortgage. They won't be able to pay their mortgage. Guess what happens? Then the bank's going to take the property, and it's a ripple effect, which usually takes 2 years to kick in. So what's happening now, people will start feeling it a year or two from now when the ripple effects take place.
Got it. I'm in total agreement with you. I actually had a friend that was like, Monica, what do you think about commercial right now? And I'm like, I'm going to stay way far away from that. Now, commercial as in multi-unit residential, I'm okay with. But anything to do with retail right now, I'm on the sidelines. I hadn't looked at all at industrial. So that's an interesting thing. Did you want to expand a little bit on that?
Sure. So industrial would mean, let's say you have warehouses that Amazon can use, right? Which is great investment for a lot of my friends, is that they had these warehouses for a long time. Nobody wanted it. And now Amazon's offering like crazy amounts of rents for those warehouse space, because their goal, which is to have same day deliveries everywhere, right? So for them to have the goal of same day delivery, they need to have warehouses in different locations that can actually deliver. And so, warehouses, people like truck spaces where people can park their vans and trucks, fleet can be parked. Those kind of industrial real estate is what I guess my circle has seen the best investments in. So again, something you can find, which is a nice space for a warehouse that could be used, or something where a lot of like fleet of vans and trucks and all that could be parked, like FedEx. I think that would be what I mean when I say industrial real estate.
Do you mean storage?
Storage is good too, but I want to I like relying on businesses more than people. Things like self storage, all that. I'm not a big fan of. I just don't like relying on people. I like relying on businesses that, let's say FedEx or Amazon or something like that, that I know they're good. They're gonna, they're public companies. They don't want any of these issues. They're gonna be okay. So I would focus on that.
Okay. Really, really good tips. Awesome. Do you mind me asking, and Anmol, this may be a very personal question, and you can just say, no, Monica, I'm not going to say this on the air, but how much did you start when you were trading?
How much?
With? Yeah.
I started with $10,000 that I borrowed from my father, which I lost most of it in a few months.
Okay, well, that's awesome. So tell us a little bit more about that story and the journey to get to where you could start investing in real estate.
Sure. So I left India. I went to London. I was studying my college degree over there. And then, second year of university, I came back. I'm like, I think I know what I want to do. I want to, trade the stock market. They're like, yeah, right. And then I'm like, no, I'm serious. They're like, well, why don't you get a job? You got a good degree, you're getting the degree, you're on the path. Why don't you just apply internship? I'm like, I didn't get in anywhere. So I'm going to try this. And my dad probably thought it's going to be a good lesson for me to learn, not to mess with money. So he's like, all right, I'll give you $10,000 to try it out. I'm like, thank you. And literally 6 months later, I had like maybe $2,000 or $3,000 left. out of those $10,000. So
Ouch.
yeah, so that was a learning lesson, but I built it back up. And how I built it back up is I started writing articles because I was really good with research, right? I wasn't good with my mindset. I was researching and writing articles for like Yahoo Finance, and they were paying like $150 an article, and I was in my dorm room in college. So I was like, 150 an article, I'll write 10 of these a week. And then I started writing them. And Yahoo Finance was paying, almost in college in my dorm room, they were paying $2,000, $3,000 a month. So I built my capital back up. And then I was like, I'm going to do it properly, this time.
Got it. And then how long did it take you before you had built up enough that you could start investing in real estate?
That probably, I would say year 4 is when it started kicking. Yeah, I still had money before, but I didn't have confidence to put it in real estate.
Okay.
Year 4 is when I, was speaking to a lot of people. Then I got the confidence, seeing other people invest in those properties. So yeah, in New York, the first investment I made was 2015, which is the commercial property that I actually ran a business on it as a franchise business. I ran that business for a few years, and I was like, I can make more money renting it. So I closed that business, and now I'm renting it. Hopefully tomorrow lease will be signed. So yeah.
Very nice. So you took 10,000, got it down to 2 or 3, and then you grew it back up. When did you start investing again? With how much?
Same year. I was just the beast because I was like, Yahoo Finance, they don't care how many articles I write. I'm going to write all of them. Like, spend a night, write. Yeah.
Did you go back in with about 10,000?
Yeah, I went back in exactly with 10, but I spent 6 of that to purchase some courses and stuff like that. So I still played with 4,000. But the good part was when I connected with my partner, so they had a firm where they were actually backing the traders that graduate from their program. So I spent $6,000, graduated from their program, and then the firm hired me as a trader. And then they gave me, let's say, 50,000 of their capital to trade in exchange, or like 70-30, we used to split the profits. So then they had like levels that you had to go through: level 1, level 2, level 7, all the way to level 10, where they were giving you $10 million. So I went from level 1 to level 7 in like a year's time. And at level 7, I was trading 3 million of their capital, and we were splitting profits 70-30. And then that's when I was making some good money when I was, but I was trading with their money for the very long time. About 1 or 2 years, I traded with their capital.
And is that the structure that you offer in your own trading company now?
Yes. So we offer that to when people graduate and we see that, okay, they can do it, then maybe I can put some of my money behind them, right? Because again, if they're trading similar to me, they're trading my strategies, I know they're going to eventually do well if they do everything correctly. I do the same model. I'll take 30% of your profits in exchange for providing you the funds.
Nice. So fascinating. Oh my goodness, I haven't had anybody like this on the show. Thank you so much.
Thank you.
And I just love, Anmol is Indian, as am I, and you come from this sort of entrepreneurial background, right? Like, kind of. Like our parents all say, you have a good degree, why not get a good job? But we have this entrepreneurial spirit. So it's so much fun to talk to somebody else just like that. Thank you so much.
Oh, definitely feeling is mutual.
Yeah, thanks. So Anmol is going to be sharing with us how to build a dream team in Extra so that you can have deals coming to you rather than you having to hunt for them. So I'm really excited about that conversation. But for now, Anmol, could you tell people how they can get in touch with you?
Sure. So the best way to get in touch with me would be through my social media channels, Instagram or Twitter. My username on both of them is the same, which is @Delta90, DELTA90NETY. Don't ask me why, but I had that name for like a long time. I never changed it, but and now it's everywhere, so I don't want to change it because it messes up the search engine. But yeah, it's Delta90. It's a trading terminology for options traders, you would know. But yeah, Delta90 on Instagram, on Twitter. And then we go to preppingforsuccess.com/book, where there's some free guides and things for you.
Nice. Okay, so that was preppingforsuccess.com/book. And he is giving away a free chapter of his book with 60-second success show videos every alternate week, is what you said. Yes? Okay, good. So he's got some videos. He's got a free chapter of his book. And then he also wanted to offer you something regarding trading. Do you want to talk a little bit about that?
Sure. So if you're interested in trading, you're like, hey, maybe this could be something that I might be interested in, and you want to learn more about trading or get started in the financial markets, best way to go would be to LiveTraders.com. And then you'd be able to download a free ebook on our website along with some more information. And if that's something that interests you, you could even call the office, have a 15-minute strategy session with someone from our team, and they can tell you if it's even right for you or not right for you, because it's not right for everybody. And they might say, well, maybe come back later. Or they might say, okay, this is where you can start. So that would be the place to go, to LiveTraders.com.
Awesome. Interesting. That sounds cool. Thank you so much for that. So, are you ready for our 3 rapid fire questions?
Yes, sure.
All righty. So, Anmol, tell us one super tip on getting started in real estate investing.
One super tip to get started is to be an active searcher for deals. Always be searching. So if you're bored at night, you're sitting, you're having a glass of wine, it's morning, you're having coffee, just look for deals. Just look for what the fluctuations in prices have been. Because in the beginning, your goal is to get a sense of pricing. So search around for deal, look at what the market area prices are around you, and keep looking every week, and you'll see the trend.
Nice. And then what is one strategy on being successful in real estate investing?
One strategy to be successful in real estate investing is actually doing it. So, the way you do that is start making phone calls, right? Start making phone calls, start calling brokers, just finding out more about, and putting the feelers out there. And that way you're also telling the brokers, hey, there's this guy who's maybe interested in investing, right? So you want to basically introduce yourself to different brokers, so today's exercise, call 10 brokers and introduce yourself. Hey, I'm a local investor in this area. My name is this. These are the type of properties I look for and would love to get a deal done in the future. Nice talking to you. Simple as that. So start putting out feelers out there, and just starting somewhere. That would be
Yeah. Oh, I love that. And then what would you say is one daily practice that contributes to your personal success?
Daily practice is like, being your word, like be a person of integrity. That means do what you said you were going to do, and then do it when you said you were going to do it. Not like, hey, I want to start this thing on Monday, and then Monday comes and you're like, well, let me start on Wednesday. I'll start tomorrow. No, like do it when you said you were going to do it, and watch how things will change. Be a person of your word, because if you don't believe in you, then how do you expect others to believe in you?
Got it. Ooh, so good. Anmol, this has been amazing. Such a great conversation and really expanded my mind again. I love talking about the 2 pieces together. They're such a big part of the way that I run my life. And you're the very first person that's done this on the show. So thank you so much for what you've offered so far.
Thank you.
Ladies, thank you so much for joining Anmol and I for this portion of the show. I am really excited for what he's going to be covering in Extra, which is all about building the dream team. So you can start having deals walking right in your door. That's going to be really fun. So if you're subscribed to Extra, please stay tuned. If you're not, but would like to be, just go to realestateinvestingforwomenextra.com and you get 7 days for free, and it will show up right in the same platform that you're watching your podcast right now, so you don't have to go hunting for it. So there's lots of really good benefits to subscribing. You get a lot of really good juicy information. So go sign up there at realestateinvestingforwomenextra.com. If you're leaving us now, thank you so much for joining Anmol and I for this portion of the show. I so appreciate you, and I'm looking forward to seeing you next time. And until then, remember, goals without action are just dreams. So get out there, take action, and create the life your heart deeply desires. I'll see you soon. Bye. I hope you enjoyed today's show. If you'd like to download my favorite investing strategy, just go to blissfulinvestor.com. See you next time.